How did the banks come up with their numbers? And for more, we're joined by Dan Arnall, who's from our business unit. And Dan, the profit they reported about $1.5 billion, a little more than that?
$1.6 billion. A lot of that coming, Charlie, from their investment banking business. With all those market gyrations we saw starting really at the end of last year, a lot of people were trading in and out of positions. And investment banking tends to be a transaction-based business. All that trading gave them a little extra gas in the earnings tank, so to speak.
But everything was supposed to be so dire. Where does the $1.6 billion really? I mean, are things that good?
Well, you got to keep in mind, you can be pretty aggressive with accounting. And Vikram Pandit just a few weeks ago was out in public saying we're making money in the first 2 months of the year. That, of course, was a kind of a line in the sand, so to speak. People expecting them to do everything they could to post a profit. They were able to do that with some aggressive accounting this time.
And when you say aggressive accounting, that means that these profits are illusory? They're not real?
Well, they're as real as some of the losses were. Keep in mind, a lot of those big losses that have really been dragging the financial services industry into the tank here are based on mark-to-market accounting. In other words, trying to realize the value of something that they're holding on their books they have no intention of selling. So those losses have been big, significant, and they've had to put money aside for their reserves. This time around, they were actually able to put off some of the expenses that they might have for the preferred shares that they owe taxpayer some dividends on, and in doing so, they were able to kind of put off some of this future expenses.
Well, it would stand to reason that they want to make their balance sheet look good now because they have been so battered. But does that mean there are tougher times necessarily ahead for them?
A lot of people looking at this industry say what's really going to be key to the turnaround of financial services is when do we start to see a bit of a recovery in the real macro economy? When do companies start hiring again? When do people have the confidence to go out and start spending again? At that point, the banks can really take some of these assets that have been a drag on their books and start to realize that they're a little bit higher value than they're expecting.
All right, Dan Arnall from our business unit, thanks to you.